Good morning, ladies and gentlemen. Well, there's no reason to take up more than 10 minutes of your time at the moment because after the NFP on Friday, there is absolutely no reason for the Fed to act any time before September, and therefore the short end mostly is going to be absolutely dead. This is the 2 year note, and it's exactly the same at the same level as where I left it when I went on holiday. And I think it's now just going to meander between 4% and 370. It's very, very unlikely that we go anywhere at all before September. But it's just going to be capped around the 4% level. So anytime you see 392, 395, 398, it's very, very unlikely that you're going to lose much money by buying it. In no way can I see this economy accelerating before the Trump tariff saga is over. And it's not going to be over for quite some time because I just can't see the EU rolling over. And I don't think the 9th is going to be such an important day. There's going to be extensions, there's going to be all kinds of machinations to keep the whole thing going. And therefore, every time you see anything approaching 4%, it's a great buy. The yield curve is also doing nothing. And, if we look at something like 2s, 5s, we're getting to levels where we are looking for it to steepen again and go down. I prefer the 2s, 5s, but, 2s, 10s is also slowly getting to levels around 42, which makes sense. And if we look at 5s, 30s, that probably has a little bit more room, but everything is in the sign that it will steepen again. It's just a question of when. And now between July and September, we have quite a bit of time for it to go sideways. So I think the bond market is going to be dead for quite some time. And really what shows you that the market agrees that it's going to be in a very tight range is the MOVE index, which is approaching these lows that it basically hasn't broken through for many years. And I just expect it to just meander around here and possibly even break them and go into the 70s where it hasn't been for many, many years. This tells you that the bond market is really dead for the next month. As I wrote on Friday, the one thing that you have to be aware of is the QRA, which is on the 28th and 30th, and the major event is on the 30th of July. As you know, Trump came out with this ridiculous notion that they wouldn't issue anything past 9 months, and Besson did not disagree, but probably privately he is trying to persuade Trump that this is a major league stupid idea. And if it does happen, the likelihood is that they change the QRA and they try to get the T-back to back the move. What would happen? Well, there would be a major duration squeeze, but it's unlikely. As you know, it could happen any week on a Thursday when they announce the auctions, but last Thursday they announced exactly the same auctions of 3s, 10s and 30s that they should have. So obviously it's not something that's imminent. It could happen, but the QRA is the likeliest time that it will happen if it's going to happen. I very much doubt that it's going to happen, but if it does happen, what are the consequences? And let's keep them in mind. You're going to have a major squeeze in duration, and you are looking for, this is the 30-year, you're looking for the 30-year to just collapse down to these levels in a day. You know, you're looking around these 430s to 420 level, and it's going to happen on the day of the QRA. If they announce that there are not going to be any 30-year bonds issued, you are going to have a major league move all the way down to this kind of level, I would have thought, immediately. You know, the market can only respond to what it's given. And although this move would make no sense because the budget deficit is constantly increasing, you are going to get a major squeeze in duration, and therefore you're going to get a major flattening of the curve. It's something that one wouldn't expect, but that is what you're going to get. And as we approach the 30th, we can put on some very cheap option plays to hedge against that potential eventuality, because it's going to be a very major thing. And it's important to understand why that would happen. This is the term premium chart on a 10-year. You are going to get a term premium move straight through these lows and probably come down to 20. So you're looking for something like a 25 basis point move down in term premium. And that is what is going to drive the market. Really what you are thinking about is that real rates will fall. And that is why owning TIP as opposed to eventually the nominal is going to be the better thing for the long term. For the short term, it's going to be owning nominals, but for the long term, it's going to be owning tips. And as we come closer to the 30th of July, I will show you a variety of hedging ways to buy tips and not be in nominals after this move happens. Germany and EU denominated debt is absolutely dead. As I told you, the Schatz is a dead contract now, and here it is. It's basically trading in a 10 basis point range, up and down, going absolutely nowhere. Just like the 2-year note, it's terribly unlikely to go above 191. That's the level that you want to have some Schatz on, because it's terribly unlikely to go through there. The 10-year, again, it's much the same like the 10-year in the US, as in so far as the yield curve is steepening slightly, and twos are a much better owning level than the 10s. I find it very difficult to believe that you can get a sustained move below 252 in the bonds, and at the moment you are continuing to get this pickup in Italy, and therefore people are preferring to buy Italy rather than Germany. How long can it possibly last? Well, we are probably very close to it not being worthwhile anymore. I mean, I've owned Italy for a long time now, and I'm getting to levels, it's getting to levels where it really, the risk reward is not great. For the sake of 90 basis points over 10 years, it's probably not worth owning Italy anymore. It's done us very well. I would be getting out, because the risks now outweigh the, sort of any potential benefit. The dollar is and has been driving all the moves, and it has got to the very important level of this bold line, 96.47. And let's have a look at that on a weekly chart and why I think it's so important. You can see that every time it gets to there, it just either consolidates for a few weeks and then goes, but the moves become major when it starts breaking down, and they tend to be in the sort of 5-7% kind of range. I'm going to enlarge this so you can see what the retracements are. Now, so this is a weekly chart, and we got there, and that's it. Now we've formed almost a hammer. I would expect the next 2-3 weeks to be between 98.37 and 96.47. I think we need some kind of, how shall I put it, catalyst to break that level. I don't think it's going to be that simple to break it. Now, if the QRA is without coupons, or they lower coupons significantly, that will collapse the dollar. And that is in 3 weeks' time. So it would be nice to see two or three bars going sideways, and then you get a potential for a big move down in the dollar. The QRA moves, you sell dollars. The move will be 3, 4, 5% at the very least, and I would expect all these levels here between 93.60, 92.50 to be touched on an absolute panic if the QRA is changed. Let's see what that means in Euro USD terms. I think it means something like this. You are likely to see a low of somewhere around 116, or maybe just lower in Euro USD, and a high, as you can see, it's just not going above this 118.20 to 118.40 area. It is very, very good resistance, and I would expect some kind of 2-3 week bull flag to develop here into QRA, and I'm going to have very large option positions. Yeah, and I will tweet this out to you. You can do literally 2-day options, because it's going to be that kind of thing. It's either going to happen or not going to happen. It's going to be black or white. And if it does happen, you are looking for these levels. You're looking into the 120s. You're looking for 122, 125 very, very quickly in a matter of days. Commodities are becoming easy. Any break of 22 and we are going nowhere, because we're just doing, continuation of these patterns where it comes back down to 2150 and then 2070. But if it doesn't, then we are immediately bullish. I think that commodities at some stage break out. And I'm loving being long at 22, and I don't care if I get stopped out, I get stopped out. I think that finally we are in a position, whether it's immediately now or in 3 weeks or in 3 months, we are in a position to start breaking out towards 26, and that is the way I'm positioned, and I like it. So it should take a while, just like everything else, just like bonds, just like the dollar, waiting for the QRA to come along. And if that happens, I think that commodity prices are going to spike. In a week, they're going to go 10%. So wait for it. Buy dips. I have no reason not to recommend buying dips in commodities. Gold is probably going to be the biggest beneficiary if the QRA is changed. Now, we can't base our strategy for the next 3 weeks on if the QRA is changed. So it's a question of just picking levels and buying the dips. And this first level here around 32.25, 32.30 is a good one to maybe buy some 1 month calls and see what happens. If the QRA change, I expect gold to move up at least 10%. Whatever the dollar does and a little bit more. So I would have thought at least double digits in terms of percentage. So it's going to go up a long way. I think the downside is very, very well sort of contained just below 32 just to stop some people out. But no way is it going to go below there, not ahead of the QRA. So you have your levels should it come down, and I think it's unlikely. You should be buying calls which expire sometime the first or second week of August. Now, in terms of whether it's better to own gold or commodities, GSG going into the QRA, if they do change it, I think gold goes more. So you're looking for this to become some sort of a bull flag, another 2-3 weeks going sideways and then up. That will also tell us if the market is expecting any change in QRA. I think a lot of people, more thoughtful people, will have some sort of an option position going into the QRA just in case it is changed. And that will contain the moves in both gold and commodities and bonds and equities until then, because as volatility gets cheaper, there will be bids for it for expiry the other side of the 30th of July. I'm absolutely sure of that. So I'm not looking for collapses in volatility, because if there is one, I'm going to buy it. And a lot of more thoughtful people will buy it too. I think the spreads all compress in these next 3 weeks. A, because everyone's on holiday and nobody's really trading, but also B, because people will be very, very aware that that is going to be a very important date, and they're not going to want to have outright positions, but more probably options positions. Equities on all time frames are now bullish. Does that mean we go up immediately? I don't think so, but what it does give us is some very important levels that the market is going to find as support. 61.14 on the weeklies, 60.40 on the monthlies, and this level is going to be probably the first level and the most important level with it, which is 61.44 on the dailies. I would expect back tests of that level for sure. It's not going to be a straight line. And why would it be? To me, this weekly chart is going to be far more important, and this weekly level of 61.14. So the first support is 61.44, but the major support is 61.14. If we stay above 61.14 for the next couple of weeks, that will show strength. Now, what would happen to equities on a change in the QRA? They would probably go more than bonds, and I showed you how much bonds would go. That bonds would certainly go 25 basis points, 30 basis points on a collapse in the term premium. You are looking for a 10% plus move here in the SPX. You're talking about, well, I would say very close to 7,000, if not over 7,000. It's going to be just a monstrous squeeze, and it's going to be the same thing that happened here. If you remember, this is where we bought equities beyond the change of the QRA, and boom. But this is going to be far more violent. It's not going to be just that. It's going to be far more, and it's going to be the spike to end all spikes, basically. So that is what you're looking for, unfortunately, and that is why you want to have some options. NQ, where is the resistance? Well, the resistance in NQ is 23,100 on the monthlies, and it hardly ever trades very much outside the monthlies and stays there. So anything over 23,100 on the monthlies, and NQ is no longer going to lead, or is going to find it very, very difficult to lead. Could it be 23,200? Yes, but you're talking about 0.25%, 0.5%, 1%. You're not talking about NQ leading anymore, And if NQ doesn't lead, then you can't expect SPX really to go very far. So that tells you that at the moment, the upside is pretty much capped. Now, if the QRA changes, this becomes a non-argument. You're going to have a massive spike in everything. I don't expect the market to do anything much but trade in a, I don't know, 23,200 down to 22,100 range for a couple of weeks. And if it holds these levels, just like in SPX I showed you, 22,114 becomes the really important level that it shouldn't close below. If that happens, then it will have room to run, especially if they change the QRA. The last equity chart I want to show you is EEM, which is gathering pace. Now, every time it closes above 47.93, it tends to have a bit of a run. The minimum run it has is 50.23, but as you can see, 52.15 is not out of the question either. So any dip in EM, you want to be a buyer. What does that tell you about the US equity market? Who knows, but certainly it's not going to be massively weak if EM is going to go up another 7 to 10%. What is this? This is another 2-3%, and up here is, and close to 10%. So you are still looking to prefer the rest of the world over the equities in the US. And that tells you that the dollar is, even if it consolidates, it's not going to be strong. So you are looking to buy the dips in the Euro USD to the levels that I showed you. You're looking to buy equities off support levels. You are looking to do nothing much in bonds and wait for the QRA, and then have an options position should they be stupid enough to change it, because that is going to have such amazing effects on everything else, on every risk asset, on every commodity, and especially on gold. It's going to be just a period in which you make your year in a day. I've changed all the levels, support, resistance, but I think the bonds are going to be dead for the next couple of weeks. We have auctions next week, therefore don't expect them to do better until the week after this. They might rally something after the 30-year on Thursday, but it's going to be very small, and it's probably not worth playing either in the US or in Europe. Both markets are going to be dead for a while. I've given you the support levels in equities. Every time it gets down to those support levels, it's worth buying some calls expiring the other side of July the 30th. For the reasons that I mentioned, remember QRA is July the 30th. And the same goes for the dollar. 96.47 is the major support. After that, we have nothing until 95.20. So that's 1% and a bit. I don't expect it to happen in the next couple of weeks. I expect these levels really to be tested to the upside. A little bit of relief in the dollar is what I expect. Not a huge amount, 1 to 2%. And those are excellent levels to start buying calls in Euro USD for a big move should QRA be what Trump has threatened. Nobody can know if Besant is actually going to change it, but that's the big risk reward level. Thank you very much indeed, and I will tweet you tomorrow.